Here we go, Vision Realty Group, Austin, Texas. My name is Pauly Campanero, owner of the Vision Realty Group. And today's market snapshot is for Austin, Texas real estate values and what to expect. Now, whether you're watching the news or YouTube talking heads, everybody's expecting the impending doom and failure of the real estate market. Now, while we may not be in a full-fledged crash yet, these numbers are definitely going to dictate a little bit more of what to expect on whether you're considering to buy or sell, take action or hold. The clarity around these numbers may give you more significance on what's best for you. All right, so let's jump in. Now, Travis is the more urban section of the greater Austin, Texas area. Travis County has experienced 7% depreciation from July to August. 7% depreciation in 1 month. That's a pretty big cut. Now, from the top of the market in May, Travis County experienced actually 13.5%. Again, very significant value lost from the peak of the market in May. Now, for Williamson County, just 2% month over month from July to August, 2% depreciation, while experiencing a 7% total depreciation from the peak of the market in May since May. So while 2% and 7% may not be as bad as 7% and 14% for Travis County, 2% month over month depreciation still not good. Okay, so we're getting a real clear picture on value slipping at a fairly significant rate. Now, as far as supply and demand, the active listings since the new year has 7x'd in Travis County. So we had a little over 600 homes on the market at the beginning of the year. Currently, we have over 4,000 homes on the market for Travis County. And for Williamson County, we had a little over 300 homes on the market at the beginning of the new year. And currently, we have over 3,000 properties on the market for sale, a 10x increase. So obviously, supply has dramatically increased, while demand clearly has fallen. So for pending sales year over year, for Travis County, we're looking at a 27% decline. So from this time last year, 27% down on pending sales. Obviously, buyers are moving with much less ferocity than they were last year on wanting to buy homes. Now, for the Williamson County area, we see a 28% decrease. So pretty even, 27, 28% in both the counties down in regards to demand and people looking at homes. Now, while the month supply still is hanging around 3 months for both of these counties, and while that technically may be a seller's market still, it certainly doesn't feel like it. From the boots on the ground for active listing agents like myself who specialize in working with helping people sell their home, we see clearly that there's some apprehension, there's some anxiety with buyers. Now, obviously, what's been happening with interest rates going up? The Feds just announced the borrowing rates to increase last week, and while those don't directly correlate to lending rates for mortgages, certainly they often fall in suit, and we all expect interest rates to go up and could easily be in the 8s or maybe even 9s by the end of the year. Now, look, for all of you millennials or even Xers or Gen Zs who get a little uneasy or queasy about that, remember that those rates actually are not in outer space for what's been happening historically for interest rates. So while those interest rates may be higher and the Feds may actually have intended to do that to slow down the market, still historically those rates are not going to be in outer space for what's happened when back in the 80s they saw rates as high as 16, 17, and 18%. Now, I don't think they're going that high, but no, look, the matter of the fact is that somebody who got a loan at the beginning of the year at 3% and now has to pay 6%, obviously that's a significant pain point for the mortgage affordability. So I'm not discounting the fact that while 6 or 7 or 8% may not be bad in the historical aspect of things, that may still not be hurting the pocketbooks for people who are looking to afford a certain price point and can't go any higher. So obviously that slowed things down. The anxiety around the markets and what's been happening with the stock market and the overall global economic outlook still is also bleak. And so people have had some apprehension in regards to whether they should move forward or not. We're moving into fall and winter months, where historically fall and winter months are less buyers looking to buy real estate. So, these factors as a whole, I think, are going to contribute to another in my opinion, 5 to 10%. I think we're going to easily see 5% depreciation. More likely, we could see 10 to 15% in addition to what we've already seen. Now, remember, we've seen 15% since the peak in May for Travis County. I believe we could see another 15% in the next 6 months. I don't have a crystal ball, and if you have one, let me borrow it. But I grew up in 2003 to 2012, the Vegas real estate market. In 2008, 9, and 10, 11, look, I saw exactly what the real estate market did. And I know, look, things are different now, but I saw how things could easily and quickly go in the direction of things getting pretty ugly. And what the biggest concern for me, honestly, is that what we see for active homes, properties that are priced below the closed values, below the pending values, and still sitting on the market 30, 60 days, and they're number 1 or number 2 in regards to lowest price properties for sale, and they're not dogs. They're good looking properties. They have features and benefits. They're in good neighborhoods, and they don't need to be completely remodeled. And so that scares me, and it more concerns me. It doesn't scare me, but it concerns me on people getting real with listing their homes and understanding what it might actually take to get their property sold in a market that's going to see continued depreciation. Now, how far down the rabbit hole we're going to go? You know, I really don't think it's going to go too much further past January or February, but I think from now until January or February, I think it's going to get a little dark. And so if you're waiting until next year to sell your property, or you're going to ride out the season to see if it gets better, look, don't do it. Sell your home now. Now, if you can hold out 3 to 5 years, because I think it's going to take at least 3 years to recover from this, then go ahead and hold on to your property. Rent it out. Rental prices are not going down from first quarter to second quarter. Rental prices are up from second quarter to third quarter. We anticipate rental prices to go up. So 8% rental prices were up first quarter to second quarter in Austin. So if you can hold on to your property for 3 years minimum, do it. If you can't and you're thinking, well, let's see what happens next year, don't do it. It's going to cost you money. I promise you, you're going to lose $50,000. We saw people who in April or May could have sold their home. Right now thinking, well, I wish I would have sold in April or May. It's cost them $50,000. We've already seen it. People in January or February or March or April are going to go, man, I wish I could have got those September, October prices. It's coming. It's coming. So the reason why I think it's coming is that if we've already lost 15%, and even if we were just to lose another 5%, which I know we're going to lose more than that, but let's say we just lost 20%, because again, we've lost almost 15% in Travis County, and we lost another only 5% over the next 6 months. I don't think it's going to happen. Then how long would it take for us to make up the 20% that we've lost from May 2023 to January, May 2022 to January 2023? That 20%. How long will it take to make up that 20%? Well, on average, we just talked about earlier in the video that a good average appreciation on the history of real estate has been 4%. Now, we've been experiencing a lot more than that in most of the hot areas around the country. And so are we going to see 4% appreciation in 2023? We might. Are we going to see 10% appreciation in 2023? Probably not. Probably not going to happen. So if we've lost 20% and we only make up 7% in 2023, then we got 13% to make up. Are we going to make that up in 2024? Maybe. Could we make up less than 7% in 2023? Maybe. Could we lose more than 20%? Maybe. Look, this is why I'm saying, if you don't plan on holding your property at least 3 years, then you need to sell now, and you need to sell fast. If you're a buyer, the question is, when should I jump in? Look, more people have lost money trying to time investments, stock market, real estate. Look, timing investments are for amateurs. I'm going to use a good word. I was going to use a bad word. Timing investments are for amateurs. So when's a good time to buy? When properties are on sale. My partner went to an investment seminar in Cincinnati last week, and investors have no apprehension around this market at all. They're looking to buy and buy with a vengeance. Now, look, they're being a little bit more careful about how they buy, but certainly properties now are on sale from when they were in March and April. And so, what does that mean for cash flow opportunity? Now, I get it. There's variables in regards to taxes or things that would cause them to have a little bit more apprehension or a little bit more to be a little bit more careful about making the investment. But investors right now are on a whole just licking their chops, waiting for the opportunities. They're coming in September, they're coming in October, they're coming in November, they're coming in December, and they're going to buy when they see the right opportunities based on the numbers. They're not timing it. Same thing happened in Vegas back in 2008, 9, and 10 when the market crashed. People were buying with a vengeance. 2009, 2010, 2011. The market was still kind of skidding downwards, and they were still buying because they knew that their properties were on sale. Now, nobody knew when the bottom of the market hit until we went past it. And so don't try to time the market and figure out, I'll buy when we've hit bottom. Look, when we've hit bottom, we've already passed it. So if you plan on living in a home for at least 5 years, then buy now, because new home builders are offering tremendous incentives. Resale homes are discounting their prices and willing to negotiate to contribute towards your closing costs. There's all kinds of opportunity happening right now. So if you're a buyer, don't wait. Move when it makes sense, when the time frames make sense for you to move in regards to the time of season. October or November might not make as much sense as December or January. So move when it makes sense for you timing wise, but know that the values and the opportunities are there now, because even with interest rates going up, look, you may want to buy now instead of waiting until November, December when the interest rate is 9.5%. I don't know that's going to happen, but certainly the interest rates are going up in the short term, and everybody expects them to go up even further in the next several months beyond what we're going to see right now. So waiting for the market to go further down while the interest rates go further up could be counterproductive and a waste of your time. So jump in the market and buy when it makes sense for you, knowing that there's opportunities and pros and cons either way. Hey, there's a lot going on here, and stay tuned, because we're going to go deeper into what's going on with the market, what's happening with tips and tricks for what you should be doing as a buyer or a seller, and we're going to be bringing those videos to you weekly, and we're going to even jump into the dynamics of what looks like a good investment. So make sure to stay tuned for what the Vision Realty Group can bring to you in the greater Austin, Texas area, because no matter whether you're buying or selling, we want to know what your vision is, because it's our mission to be able to serve. Pauly C, Austin, Texas. See you soon.